Hey, welcome back. This is the Crypto Bonus. Brad's going to guide us right now through how to predict the market and show us some pretty pictures. So, Brad, I'm going to let you take it away. What are we looking at? And tell me when to share the screen.
Let's go ahead and share the screen.
Okay.
Okay. So now some people watching this may be very familiar with the concept called technical analysis, which is not really what I'm going to be talking about. It is a little bit of that. I'm not going to show any crazy patterns and tons of indicators, because I like to keep things as simple as possible. And through a lot of study, I've come up with some ways that have backtested really well, allow me to have a confident way to know when I should be buying and when I should be either stopping buying, selling, or taking profits, right?
Okay. So in short, this is a predictive method that you've used, and I've seen your account. So full disclosure to everyone, both in the mastermind and outside, I've seen Brad. He was not long ago up over 7 figures. It's down right now because the market's down, but and I won't reveal anything more than that. But I've seen the results, and what he's going to do is show which indicators to look at. Sorry for the interruption.
No, it's
but
good.
I thought it was important.
And more importantly, I'm down a significant amount because I'm not actively trading when it goes down. I'm buying more when it goes down. I buy on the dips as opposed to selling, because my entire goal is not to trade crypto. It's to accumulate assets that I
100%
want.
the same place you are.
Cool. But can't accumulate and then feel like, I want to be able to sleep at night as well. So I'm going to give first a big macro thing that I think a lot of people don't zoom out enough and look at the entire market and what they're buying. And I think it's critical to do this.
Okay, so what are we looking at
This
here?
is the chart of Bitcoin. This just goes back to 2015. And you can see, wow, it looks like a lot of bubbles, right? Like, oh, wow, look at this. What people don't realize that this here, which I'll zoom into, was a giant bubble and a burst. And this was 2017. A lot of people remember that giant bubble and a burst. While I've got this one up, I think it's really funny where people talk about, I don't trust Bitcoin. It's going to be like, what if I buy and it's too high right now? Well, if you were, and I remember December 17th, 2017, when everything started to go, down like this. Like, if you remember this, like, look how ugly that was. And look how that looks like a tulip bubble. Well, if you were the unluckiest fella here who bought at the absolute top of the market, and then you had to watch over the course of 420, or actually just say 1 year. I don't know if you can read that. It says down 83%. You're not sleeping well at night.
No.
However, had you waited to literally 3 years, if you just waited 3 years and didn't touch it, you're break even. Had you waited another 3 years and 4 months, you were up 226%. Now that's if you made the worst buying entry in the past 4 or 5 years. Okay, so keep that in mind. And once more, as we go back and we look through history, look at these big jumps. This thing went up so much. It went up 840% in 55 days. Right now, this is really hard to get a feel for what should I be doing. That's why I come down here and I'm going to change this to a logarithmic chart. And what a logarithmic chart does is it simply changes the scale as a percentage jump, so it smooths out crazy rides. Now, what you're seeing here, I'm going to change this to a weekly chart so we can see it a little bit better. We are seeing the overall trend of Bitcoin, which really informs the entire market since 2011. Okay. So, Mike, what is one very easy overall trend you see?
Well, it's like a saw blade, up and down, but it's curvy.
Yep. And it also, more than anything, it goes up over time.
Just like the market has since it was created.
Bingo.
Yep.
Now, what I also see is, like you mentioned, it's like a saw. There's a lot of bubbles and a lot of bursts. So bubble, burst, bubble, burst, bubble, burst. Almost every single time, especially when there's a bubble, this was not considered a bubble. It has gone up higher than before and then gone down higher than before. So what we see is this overall trend line. Now, one of the most important trend lines I like to look at is the 200-week moving average. And that's this line that just appeared here. And what this is showing me, this is a 4-year moving average. And you'll notice it never goes down. This means that there has never yet been a holding period of Bitcoin in its entire history, even when it was infancy, brand new. There's never been a 4-year holding period where you've lost money. You've always gone up. This, if you notice, it also seems to hug the bottoms of the market. Now, so the very first thing this shows me is this. If I accept the fact that I believe in Bitcoin, I believe the trend going up is going to continue. That's paramount. If I believe that, I want to know two things. When is the market likely at its low, and when is it risky as hell? I either need to stop buying or get out. I'm going to show you an indicator I use for that. So number one thing I can see here is that, we're still pretty far away from the absolute bottom, but not that far. Because if I zoom in, we're at about 38 right now. And if I come down here, we're it could still drop 47% and get down to about 20,000 for it to be the low. Do I think it's going to do that? I don't, for many reasons. But there's another indicator I want to show you here. And I love this one. This is called just a logarithmic growth chart. So it just maps out the overall trend in the past 11 years. And what we see is that it's much wider and more volatile in the early days, as any asset will be. As it gets more, mature, it starts to, get a little bit less volatile. But we're seeing here, look, we're kind of near the low. Well, one of the reasons I don't think we're near this is because the only times it's really hit this has been in the absolute depths of the bear market, or this was the pandemic, the immediate pandemic fallout when everything was just going to crap and it immediately bounced back. So I look at this, the 200-week moving average is the worst of the worst. And if I can live with that, that's fine. It means it's probably not going to go down more than 50% right now. Do I want that to happen? No. But if it does, it means I'm backing up the truck. I'm selling blood, kidneys, whatever. I'm buying more. Okay?
Yep.
So this is the worst case scenario for me. Okay, so now I want to get rid of this one and I want to take a look at how do I know my buy zones and my risk zones?
Okay, by the way, which website are we on right
I'm on
now?
tradingview.com. It's
okay.
I have a paid account, but it's free to do what I'm doing.
Okay.
So now what I'm going to get rid of this 200-week moving average. And I'm going to show you a really interesting line here that I like to use. This is not a widely used number. A guy named Mark Helfman told me about this, and he back tested a lot of different lines to see how can I identify a good entry point and a good time to stop buying, right? So there's only really two rules that I follow on this one. So one of them is I try to only buy or accumulate Bitcoin when the price is below this blue line. It's below the 130-day moving average. So what that means is if I'm buying in these areas, I'm actually going to take off the log chart. This is 2000. I'm just going to zip here. This was the 2017 bull market. So I have two rules. Only buy when it's underneath, or in a bull market when the price is above the 130-day moving average and it pulls back to kiss it and touch it. So if you notice, this is the 16, 17 run up, right? Had I been in the market here, I would have been buying, sitting out, and then I'd buy here, I'd buy here, I'd buy here. I'd buy on all these places where notice it just keeps on touching it. Here, I'm just going to sit out because I've done all my buying. Now I'm going to feel a lot of FOMO. I'm going to feel like, oh, it's raging. I need to buy more. That's a rookie mistake. That's where you get burnt. Right. So I'm going to sit back and I'm only going to buy when it's painful to buy. When everybody else is licking their wounds, like right now in the market, I'm buying. Totally. So it fell below the market. Now, if you notice, it backtracks. It keeps on up, coming back and kissing the line. It bursts through, stop buying. Burst through, stop. Okay, come here. Buy, keep on buying. This hurts. Dollar cost average in. Man, all that money I lost, but I'm buying anyway. I'm going to buy because I believe in the long-term thesis. That is also critical. I'm not trying to make short-term gains. So now I stop buying, come back here. This is 2019. It breaks through. It touches it or breaks through. I'm going to buy. I'm going to buy throughout this. Here, I'm going to stop. Once more, it's brain dead simple, but what you need to know is that you're accumulating during bear markets or market dips. You're buying low so that you can eventually either sell high or never sell at all. Now, this was the March 2020 crash. I wish I was buying here. I wasn't as involved.
How low was it then?
It got down to, it went from 10,000 to 3,900 to 5,000 within a week. Really quickly, because the whole world was falling apart, right? Yeah. Started to come back, and this is approximately right in this area is when I started my education I owned a little bit like 4 years ago, but like $5,000. So now I started to go, okay, here's when I started to go deep. Like in September, I was like, I'm buy. Now I was still relatively early and I was trying to wrap my attention around it. So I did buy up through this because I had a lot more assets, but I was becoming such a big believer in Bitcoin. I need to buy more. I'm just getting in, like throw it in, let what happens. Okay. So now this is the current period we're in. This is a weekly chart, so it's a little less volatile. So at this point, it came down here. I bought more. And then I watched it drop another 30%. I was like, ow, that hurts.
Yeah.
It's okay. It's underneath my 130-day moving average. I'm going to accumulate. Here, stop. Now I was feeling really good about this indicator. And I placed a buy order back in September 20th. And I remember it right at about 40,000. I think I ended up getting into like 41. Put a big order in and notice it kissed the line and it bounced back. And I felt like a rock star. Bought it again right here. Then I saw it dip down and I felt like, man, that's painful. But right now we are in a really, really good accumulation area. Once more, buy when there's blood in the streets. There's blood in the streets because when this extends out, when this thing goes above, at this moment, it's about 47 or 48,000. I'm done. I'm not buying any more Bitcoin. Now I'm using Bitcoin as an example because Bitcoin really informs the entire market and it's going to make me go, well, I don't know. Like I'm going to buy altcoins when I'm buying Bitcoin typically as well. And when I stop buying Bitcoin, I may pull back my altcoins, but Bitcoin is the one I care the most about because that's the one I'm putting the most assets in. So if I'm looking to where, not trying to trade, where can I accumulate at the best possible prices over time? This 130-day moving average is stupidly simple. Once more, I'll recap the 2 rules. Only buy when it's underneath or when it comes down to it, because you see that a lot of times it'll bounce off of it. Does that all make sense?
Yep.
Cool.
So, under or on it.
Under or on it, right?
Yep.
Exactly. So now that's my buy zone. Okay, cool. Well, and I know to stop buying up here. So that at least helps remove the risk that I'm buying at a high.
Yep.
What can I do in order to make sure that if it's time to take profits or to sell everything and go? Now, there are some other strategies I use. My one of my close friends and my main crypto mentor is a guy named Tai Zen. I'm going to give him a quick shout out because he got me into this. He's a very professional trend trader. And he's got a lot of channels that he uses and an index-based approach. And I'm not going to talk about that because that's more in depth than this is. Like it took a lot of time to learn that. Hyper effective. But what I'm going to show you is a relatively simple way to just go, these are 3 red flags that I'm either going to take profits, sell everything, or just, short the market. Okay. So this page here is a great page. It's totally free to use. Look into bitcoin.com. And then I clicked on charts. And there's a lot of different charts here that you can look at. Can you
do a command ++ so it's a little bit bigger?
I sure can. Well, I'm actually going to scroll into some of these.
Okay,
yeah. So fine. I'm just showing you the page. You have all these little charts you can click on. Now, these are important charts that if you're just a stock trader, you might not understand because crypto is really interesting. Everything happens on the blockchain, which means every transaction is totally visible to big data. And they're able to pull in all of this stuff in really real time and make analyses of it. So there's 3 charts I was taught to use that give
and I want to add one thing here.
Yeah.
So I've told you about this person. I know some crypto billionaires. I can't verify everything, but I also know someone who claims to be a crypto trillionaire. Now that just basically means got in super early. It doesn't mean you're liquid, right? So it's sort of like, well, what does that really mean? Well, as soon as there's more adoption, it's very meaningful. It's just a matter of liquidity. But here's what this individual told me, that 95% of all the trades online are happening via bots.
Very possible.
And so what the bots are looking for is maximum arbitrage and effectively programmatically maneuvering the market. Now, some people might say the same thing happens on a certain scale in Wall Street, right? There's a lot more algorithmic trading these days versus AI, which is a completely separate thing. So, but this individual tells me that the method they use for predicting is by knowing what the bots are doing and spotting the patterns and knowing where the bottoms are. They're programmatically set up for it. So I can't validate that one way or another, but when you start looking at this stuff and you take into account that there's no question there's a lot of market manipulation going on.
Tons.
Okay. There's a lot of profit taking, and it basically depends on a cycle of take from the idiots and give to those who trade with discipline.
Right.
Okay. Whether it's a machine or a human.
Mm-hmm.
So with that, show us some of the discipline.
Okay, perfect.
Okay.
So these, and once more, all these charts, these are not necessarily price action charts. It's showing you the price compared to what's happening on the chain. Now, I'm not going to go into deep detail about what each of these mean, because frankly, I don't really know. Can you see this?
Mm-hmm. Yeah, the Puel multiple.
Uh-huh. Cool. So now the Puel multiple, it tells you what it is, the daily coin issuance divided by the 360-day moving average times the daily coin issuance, whatever. And down here, it'll usually tell you it has to do with Bitcoin miners and their revenue, how it can be used, etc. I'm not going to go into that. I'm going to just show you visually. Okay. So this line here, this blue line that you see going up, is the price of Bitcoin since 2011, okay, or 10. Now, this red line is the indicator. Obviously, this red area up top, think of this as the danger zone, and the green area here is, think of this as like the safe zone, or a good place to buy and a good place to sell. So what I love about this chart is it gives me very punctuated signals that correspond to the market tops historically. And there have been at least, if you look up here, 1, 2, 3, 4 big bubbles and bursts, okay, throughout its history. And there's been some other smaller ones, but 4 primary ones. And what we see each time is in this one here, this indicator spiked up to like 10 or 11, right? And then this next one here in 2013, it spiked way up to like 9. And then this one here, it spiked up, and it's spiking up really, really quickly. And if I was zooming in, you would notice that the correlation is almost perfectly timing the top of the market. Here's another one. This was December 17th of 2017. And if you notice, it's spiked up to this area here in the red, like right in the middle, corresponded perfectly here. One of the reasons I did not panic in May, which is when, which was the last, not even the top, but like right before this bull market started to peter out, I didn't see this get into the red zone. This is one of 3 indicators I'll show you. I didn't see it get into the red zone. I wasn't worried. It made me believe that we were still probably right in here, which, by the way, if you look at this is a really interesting corollary. If you look at these two, like this is a big dump and this is a big dump, and you could say that's pretty close to where we're at now. I mean, this is a big drop, but the indicator wasn't there. I'm waiting for this indicator to get into this danger zone before I make any profit taking decisions. Where are we now? We're right way down here.
Okay.
In fact, on this June 21st, we're in the green zone. I was buying back then. Like this was hey, risk. We are de-risked. Okay. So now this is one indicator. The way I'm using this, if we get into the red zone, I'm going to take profits or sell everything. Probably not going to sell all my Bitcoin, but I'm going to take profits likely.
Okay. So again, I'm going to why don't you just highlight, box off the red zone so everyone can see it, because it's a little bit.
It's this area
just
right here.
Actually encircle it with your cursor.
I don't know if I'm
maybe you can't. Oh, okay.
I can't write on.
Well, either way, if you see the dots, that's right where your cursor is right now. Yep. So the bottom line, that's the profit taking time right now. It's at this moment very low. It looks like it probably will bottom fairly soon.
Right.
Yep.
Yeah. And hopefully it has. But if it does, look, it doesn't stay down in this bottom area long. And if it does, that's when everybody else goes, let's get back in, let's buy this turkey.
Yeah. Yep.
Okay, cool. So that's important. So that's one thing I'm looking for. And then that means either stop selling, sell everything, take profits, or if you're really advanced, short the market. Right?
Okay.
But I want to see a punctuated thing here. Now there's another one that looks like very similar, but this is the MVRV Z-score, market cap minus realized cap divided by standard deviation. Who cares?
Yeah.
Look at the pattern. Nerd shit. Look at the patterns. You're seeing very punctuated things. This was one, it got really high. This was another one, got crazy high. And these are all corresponding with the top of the market. This one got fairly high. We knew it was frothy back then.
Mhm.
It had run up quite a bit,
Yep.
but it wasn't scaring me yet because this one and the Puel multiple were not in the red zone. So I'm like, I'm not panicking. I'm chill. Right.
And just so just so everyone can see the dates, that was in February.
This was, this spiked. It didn't even get into the red zone in February of 2020. So I'm like, I'm cool. And back here, even at the tippity top, it was still down here. I was like, I'm not worried because these things are showing me that historically, it's not a blow off top. I'm expecting at those points, back in April or May, if I was worried that it was going to hit 100,000 really quickly, and I was like, if it hits 100,000, all these triggers are going to go. I'm going to have to get out, take profits, or do something.
Yeah,
cool. So now these are the two main top indicators I'm watching for, and I'm looking for both of them to kind of spike.
And you're again looking for in the red zone or nearing the red zone. Those are sell times when it's bottoming out and you see a low. Yep. And down on the very bottom, it was at a green line. I can't really tell from here. Okay, the very bottom. Yeah, the green line. Those are clear buying indicators on or near them.
I think so.
Yep.
And most importantly, notice it doesn't get into either of these zones often or for very long.
No.
It stays there for a hot second, and it just means, all right, market's going crazy. Everybody's a lunatic right now. Everybody's excited. Everybody thinks it's going to continue to go up. More risk in the market, either get out or stop buying, right?
And we're looking at basically 2-year gaps for these, and both of the charts,
if not 4, sometimes 4-year gaps.
Okay, all right, good.
So those are two of the primary ones I'm looking at. Now
what's the other one?
There was a third one called the Pi Cycle Top Indicator. Now, for various reasons, this is not my primary one. Although, had I followed this one when I saw it trigger, it would have saved me a whole bunch of money.
Okay,
so I'm going to show you this. Now, this one's a little easier to understand what's going on. Blue line is Bitcoin. The orange line here, if you can see it, is the 111-day moving average, very similar to the 130. And then this green line here is the 350-day moving average. Don't ask me why they picked these. I think they back tested it. The 350-day moving average doubled times 2. So technically, a short-term indicator is going to be a lot higher and more volatile than a long-term indicator like the green line. But that's why they doubled the green line, because they were saying, okay, when the shorter term price action gets so frothy that it crosses or touches like the long-term one times 2, that just simply means it's getting euphoric. It's getting people are getting really, really excited, right? So if we look closer at these things here, I don't know if you can see it. What we're looking for, I'm going to zoom into this. We're looking for when the orange line crosses above the green line.
Green line,
And if you notice this, it did it right here. There's a dotted line. It did it about 3 days before the market cycle top.
Yeah.
And then it came back down, right? And then here we go. Bull market, orange line, touched it, came in 2 days after the market cycle top. Okay. Let's look at 2017. You can see it right here. It crossed basically the day of it. It had you only used this and you sold the day it crossed or touched, you would have went to cash and you would have sat out the entire time, right? Until it starts to get back, into your buy zone. This does not tell me the buy zone. This just tells me the tops.
Yep.
And then the last one, this one did trigger, and I was paying very close attention in May or April.
I remember this.
So look right here.
You were very fat and happy then.
Yep. I was fat happy. It was April 11th. And I watched this happen. I was like, I am so I should get out. This is telling me that it's a top, but my other indicators have not triggered. So I'm not going to make a move. Had I made that move, look, I would have missed this. Okay. So that's one important thing, but I don't like to just do things like with one. I want all 3 to trigger. I'm going to zoom out one more time and I'm going to show you. So is right now a safe time to buy, or is it a risky time to buy? Well, we are moving away from that. We have a big gap here. So we are not anywhere near a market cycle top. I don't think anybody thinks we are. But even when we hit a high here just a few months ago, we're nowhere near.
Still didn't crisscross.
Yeah. So this is, when I first discovered these things, I was like, could it be this simple to almost perfectly time the market cycle top of at least Bitcoin and probably the rest of the market? We'll find out, because as I've been trading these indicators, we have not seen them all three trigger, but I'm watching close. So let me kind of sum up a very simple, I think it's and I did not create this. I learned this from studying other people.
Mm-hmm.
This could be one of the simplest, most, oh my God, if it's real, it's too good to be true. When do I buy? Mike, when do I buy? 130-day moving average. What are the two rules?
It's basically below.
Yep.
Yeah, it's really
below the 130-day moving average, or
as it crisscrosses.
Or as it touches it. As it dips down in a bull market when we're above, as it comes down, that's just a buy order.
Or below.
And it doesn't matter if it keeps on going down, that just means buy more.
Yep.
So there's my accumulation. And then my red flags are, my Puel multiple. When it spikes up into the red danger zone.
That's when you sell.
Yep.
It's peaking.
Yep.
And then when it hits the green zone down below, not
even the green zone, but because I'm really looking for market cycle
only that.
top.
That's where I got screwed.
I look at the green zone as a bonus material. Like, okay, if I'm looking to really dump in, is it green? Cool. But what I'm really using these two are sell indicators.
Yep.
And then I combine that. I give this like a weight of like 1. This has a weight of 1. This has a weight of 0.5 to me, right? Like, I'm like, if I just see this, it doesn't make me get out, because it might mean there's a big dip. Although the only times it ever really hits has been market cycle top. So maybe I should weight this at 0.75. That being said, if I don't do anything but Bitcoin, and I don't do anything but buy on this indicator and sell on these indicators, I believe it can create generational wealth if you go in deep, because you understand the thesis of why primarily Bitcoin, and because everything else kind of follows Bitcoin to a large degree.
Yep.
Ethereum, etc. Now, I don't use these things on Ethereum. Ethereum does not have a long enough market cycle. It doesn't go back to 2011 to really spot these patterns. And patterns are everything in investing and trading. And I've never seen indicators this clear in the stock market or anything else. Maybe there are. I haven't studied it as much. But with these, I almost feel like I have a secret weapon. Like, I kind of giggle inside going, I'll figure it out if I've cracked the code with this. And once more, I want to give a lot of just a shout out to a guy named Mark Helfman, who I've actually become friends with over Twitter and on his newsletter. He's the one who told me a lot about this, this methodology. So I hate to take credit for something that I learned from others. I've added some of my own little spin to this and the things that I look at, but this allows me to sleep at night, go in deep, and realize that I won't get caught, hopefully, holding the bag if things go south. So this is my super secret, hyper advanced strategy that anybody who's not a geek can understand.
Yeah, no, I'm impressed. Now I get it. And what I couldn't hold in my head before was overlaying them.
Yes.
But this is definitely something you want to watch and review a few times.
And you don't have to do it daily. I mean, you can look at this weekly or monthly. Like, I don't open these charts maybe once every 2 weeks, every month. Just I'm double checking. By the way,
it'd be pretty easy to create a little bot or, hire a nerd to create a little tool that monitors these 4 things and, send you a little ping pong. That's actually not a bad little app
you can do that. So like, for instance, on TradingView, it's really easy to set an alert that I can just set an alert that says when the price touches the, let me see if I can.
But can it do multiple alerts? Like, as in, can you combine charts?
Yeah. There's a lot of things. Like, there's a lot of cool trading alerts and things you can do on here that are really, really fun. And then on this one, I actually think, you can access indicator alerts. So for $29 a month, it'll say indicator alerts via email for critical things. So you don't even need to build a bot. You just pay $29 a month and you can get this stuff. However, I don't want to follow, especially the big trend of this stuff daily, because Bitcoin sets the temperature for everything else. Now, other coins, altcoins, trade a lot more volatilely, but they don't have the same historical patterns that we can trace. And they're still in what we call price discovery. They're trying to figure out what their thing is. Bitcoin has kind of figured out its price discovery. It's up, right? And especially over the past 11 years, in the most volatile time of an asset, when it's the most dangerous, what we've seen is that what doesn't kill Bitcoin has quite literally made it stronger, right? It just keeps going up. I want to play this trend, especially when you look and overlay. Have you ever seen the overlay of the internet adoption versus crypto. Okay, so this is the technology
zoom
adoption
in one
curve.
more clicky thing here. There you go. Yeah.
So
there.
look at this white line. This is the global internet user adoption from 1992 to 2006.
Mhm.
So you went from about 8% in up here 1992.
Yep.
To damn near 100% adoption. And where are we right now? We're right here, which is total internet users. I don't know. It's not using as a percentage, but right now it says here. What are we in 2022?
Yeah.
Okay, we're right here. Actually, I take that back. I keep on looking at the wrong things. So this is it's like reversed. Yeah. 1992 to 2006. There is 1 billion internet users, or
now there's 3.7, 3.8 ish.
Yeah, this was 2006.
Yeah.
Right. So where does the crypto adoption curve, how does that compare to the internet? Well, look right here. Number one, we can see it's growing faster. There's more adoption of crypto than there was of the internet. Crypto is insanely more hard to understand than the internet. Like internet is get on, look at cat pictures and other stuff.
Yeah.
Right. So
and boobies.
Right. So we are here. So if you look at in 2021, we are where the internet was in about 1997. If you only look at the number of people who have adopted it, and if you look at there's an 80% average yearly growth. And if we just get to this point here by 2024, we'll have 1 billion crypto users, 3.7 billion crypto users, half the planet by 2030. So,
well, we're just about 8 billion
on
the planet now. So
it's crazy.
Yeah, that was then.
Yeah.
We've had some population explosion going on. Okay, keep going.
So anyway, I just think this is super important when people go, oh, we're in a bubble. Yeah, we were in a bubble, just like the internet was a bubble in 1997, right? And I remember that. Well, we are growing faster than the internet. We better start paying attention to this stuff. And if we overlay that with what crypto, like with what Bitcoin is doing, do we think this is just going to turn around and go down? Well, I don't, for multiple reasons, but look at what's happening globally. I read a quote that says, lifeboats on a sinking ship don't need a marketing department. The global political system is a sinking ship. The US dollar, the reserves, everything is a sinking ship. Inflation is now, it's like we were already starting to sink, and inflation is like, well, let's tip the boat a little and take on some more water.
Yeah.
So this is a life raft that has the ability to be like a power, like it's imagine there's a whole bunch of yachts that serve as lifeboats on a cruise ship. It's like, I'm going to get off on this lifeboat. This lifeboat happens to have the ability to turn into a yacht at any point, not just a quick, lifeboat. To me, and I've talked about this before, that's when you marry an amazing defensive strategy with an amazing offensive strategy. It just happens to be the same thing. You don't need to do both. And when that clicked, the hardest thing for me to do, thank God my wife is not as crazy as I am. The hardest thing for me to do is not put every single thing we have in there. It is still so tempting to just pull the trigger, but
my wife won't let me do it either. And I'm like, I get itchy because, this is one of those things where to me, it's so obvious. Just like when I was on BBSs in 1981, using acoustic coupler modems, way pre-internet on MECC, Minnesota Educational Computing Consortium, playing Oregon Trail.
Wow.
Where you had to type into a thermal printer. This is pre-screens, okay?
Yeah.
And then, Apple IIs, and then BBSs with VIC-20, Commodore 64.
You've been on the forefront of tech. You're a tech guy. Like
for a long, long time.
Yeah, exactly. You get this stuff. So I know when you see it, you're like, no, this is it. You were way ahead of the curve on just internet video, Traffic Geyser, all this other stuff. Like you were on that. So I love the fact that you spot it too, because it is one of the things, once you spot it, you can't not spot it.
Oh, this is...
And it...
Yeah. And I'm going to add one more thing, which is Michael Saylor, I believe, that's the MicroStrategy guy. So at this moment, they hold about $5 billion worth. And that could be $8 billion tomorrow as soon as this thing cranks up again. So his argument is gold can be manufactured. It will be very shortly. The only reason gold has value is because a lot of people say it has value. Nothing more than that.
And it is hard to mine gold. It's challenging. It's not impossible though. No. Gold price goes up, they go produce more.
You're right, right. And soon, let's say when there's space mining or whatever, there is no lack of supply of it. Bitcoin is the only thing that has a cap of 21 million units.
Got a very hard cap.
Yep.
Cannot change it.
Right. And his argument is technology can decimate any form of scarcity. This is the one thing that has true scarcity.
Mhm.
And all it needs is an agreed upon number of people to decide it has value, just like an agreed upon people decide the dollar has value, or a car, a BMW, or a Rolls Royce, or whatever it is. But you know what? A story in the marketplace can decimate the perceived value of something. Just like Russia's entire economy was decimated because enough people agreed that they're bad, right? So now can Bitcoin get that? But here's the deal: is when you're dealing with something with perceived scarcity, people agree that they will exchange it for time, materials, goods, or whatever. And there are better mechanisms in place to prevent fraud than any other system. And once more people get educated on the criminality of what governments, taxation, and how manipulated the monetary system really is, okay? It's just that enough fat cats benefit from it. And I believe that will continue to be the case for a long, long time. But if I had to hedge a bet, it's a better hedge. And as I've said for many, many years, like I actually have some gold, but I realized I went through a phase where I bought a bunch of silver and gold, and I realized, okay, let's say there's a zombie apocalypse. Let's pretend there's anything. You put 2 bars of gold or 2 bars of silver in your pockets and try to run, the tigers and zombies are going to get you,
Exactly.
you idiot.
Yep.
And you can't eat gold. Now, you can't eat crypto either, but I can't right now, I can't travel with more than $10,000 of any currency, and the cops will confiscate it if they invent a reason to suspect anything.
Yeah, that's you're guilty until proven innocent.
Totally. And you'll never get it back, and there's no consequence for them for stealing from you.
Absolutely.
So I think, again, in the grand scheme of things, right now is the time to educate, invest whatever you feel comfortable in, learn the techniques that we've covered so far, which is start by buying a little bit on Coinbase, follow the bouncy balls that we've provided, transfer to Exodus. I would definitely think that earning interest, and we'll cover this in the mastermind, doing some DeFi, staking, interest-only things, and we'll get into some of that. I think it's smart. Even if you just gamble a little bit with the bots, it is so easy to set up, and you can watch it, and as long as you just let it ride, okay? Yep. And then any kind of an ill-performing one, you stop it, and then you add a new one and rotate.
Absolutely. And you don't do it with money that you need to retire on or to pay your groceries with, et cetera. Like that's what I do is I take my 80% is my super blue chip stuff. 20% is a little bit more aggressive. And then, I may take a little bit here and I play with the stuff to where, okay, what if this works? But I'm trying to learn. And, you talked about getting educated. I have a quote that I talk about, especially with crypto, but this has really to do with anything, but especially investments. If you don't make time to learn, you will get schooled.
Yeah.
Right?
Oh, yeah,
And it's so important. But the other thing, and I love this other quote. So this is this slide is just called A Bitcoiner's Journey. It takes little talent to come up with 100 reasons why Bitcoin will fail, but it takes genuine curiosity to systematically debunk these reasons one by one from first principles. This is how a Bitcoiner is forged. Wow. And I love this concept that you are forging yourself, because there are a million reasons. So Bitcoin has been called a duck-billed platypus. It's like an amalgamation of all these other little assets with different qualities that have never existed in the past. So we don't know what bucket to put it in. So you have to keep on looking at it from different angles. And the more you look at it, the more you try to, I try to shoot it down. I go, okay, what about this? And then I go research. I'm like, oh shoot, they seem to have an answer for that. Yeah. Or at least the worst case is a low probability. And then by doing that, you are forging your education with fire. You're trying to battle test it. And then pretty soon you realize oh man, this is actually really hard money. That's what they call it, hard money. This is steel. Now I get it. And there is a very, for me at least, there's a very confidence building thing to go, I get it. I know what I'm investing in, which is a Warren Buffett axiom. Don't buy things you don't understand. He doesn't understand Bitcoin.
Mm-hmm.
Him and Charlie Munger. But when you do.
But they didn't understand Apple not that long ago.
now
They
they're a
were
huge
crapping
shareholder.
on the internet, and they own, I think, more Apple stock than any
they're
any
the
other
biggest
group.
shareholder.
Yeah.
Yeah,
Right.
it takes them a while to understand. It
Mhm.
will take you a while to understand. It did me. But it is a journey or an effort worth pursuing, at least in my book.
I agree completely. Well, why don't we wrap up this segment?
Yep.
So I'm going to sum this up as hopefully you enjoyed this. Now, if you haven't already requested the transcript of the show and Brad's book, you can get it at paidforlife.com/mastermind. And there you can also learn more about our masterminds that we do. And they're basically high end. Our brand new one that we're going to, as of this recording in a couple weeks, is in Guadalupe Valley, Mexico. We're staying at an incredible compound that you couldn't possibly rent unless you know people. We have a sommelier, musician, really smart people. We're doing a pig roast, lots of wine, tequila, mezcal. Even if you don't drink, the community aspect, the friends you make for life are worth it. And you can learn more about some upcoming events where we bring in guests. In this case, we're doing crypto. We're actively trading and masterminding together to support each other in our businesses. So you can learn more again by texting crypto, the word crypto, to 855-955-3958, or again, heading over to paidforlife.com/mastermind. So if you've enjoyed this, make sure you share it with someone you care about. If you're in the mastermind, don't do that quite yet, because I literally made this for you right now and you have access to it immediately. Not all the links are going to be working until I get them done. But for everyone else, they're live. All right, my friend, let's say goodbye to the camera. Thanks for watching.
Thank you.
If you're at the mastermind, we'll see you very soon. Bye-bye.